friends, it's your girl Chacha reporting live from the Money Mantra, and we are back with another Forex education video. If this is your first time coming to my channel, welcome, welcome, welcome. It is my duty, I feel like, to help as many people as possible become independent and profitable traders within the foreign exchange market. Or if you just want some mindset coaching and you want to figure out what is wrong with your relationship with money and how to improve it, you can check out my other series called Off the Charts, which I post here in any streaming platform that does podcasts. You just have to search Off the Charts and then put Cha-Cha. So if either one of those two things interest you, make sure that you do hit the subscribe button, make sure that you give this video a thumbs up, and make sure you leave a comment if you learned something. So today I'm going to be teaching you about one of my favorite indicators that I use when I first started trading, and it's called the Stochastic Oscillator. And it sounds crazy. You can just call it the stock, or you could just call it the SO, which I tell some of my students if you can't remember Stochastic Oscillator. Now, the platform that I'm going to be using to show you guys this is called Tradingview.com. Tradingview.com is a free website that you can use. Well, it does have a free version and a paid version, but on the free version, you have access to this as well. TradingView is a great place to analyze your charts before you enter your trades because it does have so many features that you can use, and it's a really nice community where you can find trade ideas. So first, we want to go to tradingview.com, and then we're going to select the currency pair that we want to use. You can simply do that by clicking on your screen and searching the currency pair that you want to use if you have one that you prefer, or there may be some preset ones to the right of your screen. Now, to add the stochastic oscillator, first you want to click on indicators and you want to search stock. Right now, a few different ones are going to come up, stochastic RSI and the stochastic, but we're simply going to click the stochastic. And as you can see, the stochastic has popped onto the bottom of my screen. Now, while the stochastic may look like the market, it's supposed to because it's telling us what is happening in the market and if price is steady, overbought, or oversold. So what you'll notice is that if price crosses above this top line, let me find a better example. What you'll notice is that when price crosses above this top line, price is typically considered overbought, and this is an indication that price will sell. And if we look at the market that's immediately above it, we can see that that's exactly what happened. The market experienced some resistance here, and because price was overbought, meaning there were too many buyers in the market, the sellers actually pushed the market down. And this was indicated by the stochastic crossing above the 80% line, which we can see here. Now, the second thing that the market can do is be oversold. And when the market is oversold, you'll notice that the two lines are at the bottom and it's crossed below the 20. And once the market has been oversold and it's ready to buy, you'll notice that this is exactly what has happened in the market. So this is a really great indicator to let you know when price is about to reverse. And I'll just scroll back on my screen so that we can find more examples of this happening. So here's another great example where we see that price hit an area of resistance. And then we also see at the same time, price was also overbought, meaning that it was going to sell eventually. And that's exactly what happened. And here's another example of price being oversold, and it is being reflected right here. And then price actually did buy. Now, this is an indicator that you can use to help you find entry points with reversals. And yeah, that's pretty much what I use it for. I'm just going to zoom in a little bit, right? And I'm just going to double click it. Let me zoom out. I'm actually going to zoom in a little bit, right? So that we can see something a little bit better because there's two more things that you can note with the stochastic to give you an indicator whether the market is going to buy or sell. So not only will price be overbought before it sells, remember, which means it has crossed above the 80% line. If you see that the orange line is above the blue line, as demonstrated in this examples, this also lets you know that the market wants to sell. And we can see that although we did have a little resistance, the market actually did sell at that point. And the other way, if you're looking for a buy, you'll always see some support, right? At the bottom, you'll also see the market is oversold, meaning that it's going to buy. Once it has crossed below the 20 line, it has started to cross back up. And then you'll see that the blue line is above the orange line. So let's review really quickly. So price can either be overbought, right? Meaning that it's going to sell. Or price can be oversold, meaning that it's going to buy, which we can see demonstrated here and here. And in both examples, we can see here, the orange line has crossed over the blue line, giving us more of an indication that the market will sell. And here we can see that the blue line has crossed above the orange line, letting us know that price will buy. So that is one way that I like to use the stochastic oscillator. I really hope that this video was helpful and that it will help you become more profitable in your trades. Until next time, rich friends.